Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So here we are on a Thursday, spinning this video up in advance of the long holiday weekend. Hope you and yours have a great weekend. So, boy, I tell you, what an incredible couple of weeks. The elephant in the room right now, obviously, is the U.S. China trade turmoil, war, whatever you want to call it. But it doesn't look like, or it doesn't feel like to the markets, that there's going to be a quick resolution, something that, we've been talking about every day. And, right now, the next time there's a scheduled talk on this is the end of June, which is, June 28th, 29th at the G20 meeting. So, you're talking several weeks away before another talk. So it looks like right now that the stock market is kind of giving up, at least in the near term, that there may be a solution. And so I'm watching stocks down to the tune of 400 points, real bad day for stocks. But at the same time, isn't it unbelievable how mortgage-backed securities are only up 3 basis points beneath resistance at that 102.84 area? And again, we've been talking about the outsized gains in the Treasury market. Look at the Treasury market up big, up 38 basis points. So we're seeing a real disconnect. And this is something that we need to be sharing with partners and with clients that you have in front of you, because they can see the 10-year note yield dropping to 236 as of this morning, but that's not translating to better rates. So you have to make sure that you're walking them through the charts, what's really happening. And over the last couple of weeks, again, we've seen a lot of red candles show up in the face of declining stocks, which is telling us that there's like a limit to how good mortgage-backed securities are going to trade. Now, could we move another leg higher? Yes. If we were to draw a line here, this was resistance, and then we popped above it, and now it's support. And so we are seeing support beneath the 50-day moving average, and then underneath, not too far beneath current levels. But in order for prices to get better, we're going to have to break above these price peaks, seen earlier this year. Next week we have gross domestic product coming out. And it will be interesting. I mean, this is the second look at the first quarter, so it's still backward looking. I'm more concerned about what does the second quarter look like now that we have this trade negotiations, kind of being derailed, and a lot of uncertainty there. So we'll have to see what those second quarter numbers look like. The other factor that's helping us in the mortgage business as it relates to rate is what's going on abroad. We have to follow what's going on in China and in Europe. And right now, Europe is really limping along. We're watching a 10-year Bund, that German Bund, which is an important metric to follow, trading at minus 12 basis points. So if you want to understand why your rate sheet and why long-term bonds are performing well in the United States, it's because the yields across the pond are declining. I mean, at minus 12 basis points, it's no wonder why the 10-year note is at 235. So these are things you need to be thinking about as well at going into the summer. So here we are into the official, unofficial start of summer with Memorial Day coming Monday. So the bond market will be closed on Friday early, closed on Monday. And, what I would be sharing with clients is as follows. Right now, if you have clients that are getting within that 30 to 45 day window, you want to certainly be looking to lock those. But the longer term folks, I'm watching this 50-day moving average pretty carefully, right? We have this great signal with the golden cross here. And that really did suggest that things were going to get better, and they have. The 50-day moving average you can see over time is rising, which is a really positive development. So longer term, new construction, things like that, boy, no rush to lock right now, especially with the uncertainty around a fix at all on this U.S.-China trade turmoil. But if we break beneath that 50-day moving average, all bets are off. The story's changing. You have to lock. We'll be watching it for you, of course. And again, thanks for being a part of Mortgage Market Guide. Have yourself a great weekend. We'll be back at it soon. Bye for now.